Hi everyone, today we're talking about 5 stocks that are down 40% or more and that are good stocks to go and buy. Now, some of these stocks I'm going to talk about, I actually own myself, and I'll talk about why they're down, some positives of the stock, and try and do kind of just a 3-minute talk about these stocks. And as always, I think most of these stocks I'm talking about today, I do have somewhere else on my channel, a full video talking about them for a little bit longer. So if you want a little bit more information, go check some of my old videos out, and there's some videos of me talking about them stocks somewhere on my channel. But all these stocks are pretty decent stocks, to be honest with you, and I'm not gonna lie, I was actually gonna do down 50% or more, but when I looked at the stocks that were down 40% or more, I thought there was actually some really good stocks in this list. So that's why I changed it to that, and we'll have a look at some of them, and we'll get stuck into it, and we'll talk about some of these stocks that are down 40%. They're at some good opportunities to go buy. So the first stock on my list is probably my favourite stock. It's called Align Technology stock, and it's about $180-ish right now. And this stock was actually originally just about touching $400, and it's pretty much nearly half to nearly 180 now, which is actually insane. The P is down at 34. And in case you don't know what Align Technology is, it's basically a manufacturer of braces, aligners, and one of the best companies in that sector. And they're basically down because they are a great growth company, which were pretty much priced to perfection. And because they brought an earnings report out that basically said that growth wasn't going to be as good as what they were expecting, and because it was just priced so perfectly, that news just sent the stock down absolutely huge. And I think now that it's massively overblown, and it's a company that I own, and it's one of my favourite stocks, and it's my favourite stock on this list that I'm doing today. The company has absolutely no debt at all. It's a stock that's still growing at 20+% revenue, 20+% EPS growth, and it's a fantastic company that will probably bounce back from this. It's trading at a P of 34 now, which some people might say is still quite expensive, but when we look at the PE history, this is quite a low PE, and let's not forget, it's still a stock that's giving you such a massive growth, so it's still going to have quite a high PE. But overall, it's a great company that's had definitely a massive discount, and I think that this is probably a stock that is definitely needed on a lot of portfolios, because it's a fantastic opportunity to get into a stock like this with boasting just so much clean balance sheet and the growth that it has, and not bad a PE as well. So I think it'll bounce back from this at some point soon. So even from probably the next earnings report, I see it recovering as well. So Align Technology is definitely a stock that's down huge that I would definitely have a look at investing in. Number 2 is FedEx, and I'm pretty sure everyone's heard of FedEx, but basically it's a courier delivery company that delivers parcels. If you don't know what it is, which I'll be absolutely shocked by, but it's $164-ish now. It has a little bit of a dividend yield, and this stock we were talking about, a $250 stock, now down at $160. Now, I would say there's two main reasons why this stock is now down at this prices, and the two reasons is that it's been hit very hard with the China trade war news, as a lot of companies have, and also because of the China trade war news, it's also got another competitor that is Amazon. Now, FedEx used to do a lot of delivery for Amazon, and now Amazon's kind of drifting away and doing its own delivery service. And this has kind of hit FedEx really hard. But when we actually look into detail of that, actually Amazon only makes up about 5% of FedEx's revenue, which isn't absolutely that much really when we think about it, 5%. So I think FedEx can recover from that, and I think that the China trade war news and the economic slowdown will kind of level itself out at some point. And I think one of the big benefits for FedEx that not many people talk about is that when we look at the rise of e-commerce, we only have to look at Shopify and look at how their stock is doing this year, and the amount of e-commerce sites that are coming up. And we look at the brick and mortar stores that are now closing down. Everyone's going online. That's only going to benefit FedEx even more. And when we see amount of the countries that are developing, and FedEx will move into them kind of developing countries, when the internet gets more developed, and kind of the kind of e-commerce sites get really more developed in them countries as well, FedEx will benefit from that. So I think there's just so much potential for FedEx with the growth of e-commerce from right now, that it's a stock that you kind of have to look at and say at some point, it's a great company with a forward P of 10 right now, and it's going to be a good buying opportunity for sure. So FedEx is one that I personally aren't going to buy right now or probably this year, but it's a stock that I definitely am watching and seeing what happens with FedEx going forward. Number 3 is Carnival Cruises, which is at $45. It is a stock that I do currently own, and I've always said that, I do actually like Royal Caribbean a little bit more than Carnival Corporation, but don't tell anyone else that. But I do like Carnival Corp. If I didn't like the stock, I wouldn't have bought it. And Carnival Corp is a stock that's trading at $45 now, and it was early on in September, was trading around about $66, and that's kind of the range it was at for a very long time. It was in the 60s for a good year, and then it's dropped down quite a bit. It does pay a decent dividend at a low P of 10, a dividend yield of 4.43, which is pretty good. So I kind of class this as a dividend stock, but it still has quite strong revenue and EPS growth. The reason why Carnival Corporation is down massively is because margins are getting a little bit more tighter. There's been a lot of pressure about oil prices, and it's just kind of being a bit of like a seasonal kind of. I think Carnival Corporation has just had a lot of bad news with a lot of prices not going their way and margins getting hit quite a bit. And it's kind of happened again this quarter because we've obviously had the recent hurricane, and it's come out that Carnival Corporation, they could have their EPS in the next earnings quarter hit by 5 cents, and it's just one of those where it's just another bit of bad news for Carnival. And I believe at some point that they'll come out of this bad news streak, and I see a good 30% upside alone in this stock. Never mind the dividend that you do get with this stock as well, that is a very safe dividend, a dividend that they can carry on paying, a dividend that they can increase as well, because it's a pretty low payout rate. And I do like the management quite a bit, and it's a dividend stock in my portfolio that I've always kind of thought that I might add a few more shares in. So for me, Carnival is a stock that I really do enjoy holding, and I believe that I still have a good 30% upside in this stock right now. Number 4 is Uber, and Uber is pretty much a taxi, and it's classed as a food delivery company now, but I'm sure everyone's kind of heard of Uber. And Uber originally IPO'd on May. On May, it IPO'd around about $41, and it's now all the way down towards $32, $31. And I think when we look at the potential for Uber, it's a massive company that is a disruptor in a sector. When we look at the taxi service, Uber has disrupted the taxi service, and also it's kind of disrupting the food delivery industry, but that's kind of not massive. But I think for the transport way and the potential for driverless cars, and for driverless cars to basically just all go around with Uber operating them. And as well with Uber is that it's only a company that's pretty much recently a new company. And the one thing for me is that a while ago I actually got a taxi in kind of like a bit of a more like rural kind of place in the UK, and I went and got a taxi, and I had to phone it up, and it had to come, and then it took me somewhere. And I said to the taxi driver, I said, I'm so used to getting Ubers now and not having to phone up and seeing where it's coming and paying online, and I nearly forgot to pay the driver. And after telling him all this, he kind of was like, "Oh, what's Uber?" And it was like kind of like, whoa, like even some taxi drivers still haven't heard of Uber. And that's the thing, is that Uber has so much potential in a lot of areas to go still. Uber's still has quite a few places where it can go to that will help its revenue, its EPS, so it's going to expand. Obviously, the company is bleeding a lot of money right now, and also with it being a recent IPO, I don't tend to buy IPOs until about a year after the IPO. In fact, it's about 280 days that I don't buy an IPO. So for me, I won't buy Uber until next year. But when I look at Uber and I see the potential for this company, I see such a massive potential with this company that I'm kind of looking at these prices and going that if it looks like in 2020 Uber might be able to stop bleeding as much money, and when it stops bleeding that money, is there an opportunity to buy this company at such cheap prices? I think that potentially next year there's an opportunity to get into Uber. So for me, this is a stock that I'm definitely watching, and it's a company that when it gets to 2020, might be a company that I actually go and buy. And my last stock is Altria, which is a stock that I actually did a big massive deep dive on as my last video, and they are basically manufacturers of cigarettes, and they have kind of now gone into the vaping industry and the cannabis industry, and it was a stock that was at $75 at the start of 2017. It's now a stock that's all the way down at $43, so it's nearly halved in value. But it's a company trading at a 13p and with a dividend yield of 7.6%. Now, I talked about this company recently, and it's a company that I see some problems with the revenue growth, and that potentially, we talk about smoking and the decline of smoking. But like I said on the video previously, that I still believe that we're still going to have quite a few people that are going to smoke. We have quite a few people that are going to go to vaping. We talk about vaping that's growing at, I think it's like 200% a year at the moment. The cannabis market, if we see a lot of legalization, that's going to be a big, massive benefit for Altria, because they're going to be in that industry as well. So the company is the management has done a really good job to diversify now from just the cigarettes manufacturing to now vaping and cannabis. And the dividend itself, and if the profit margins stay the same and the revenue stays the same, then we could see the dividend not being cut, which is ideal. I don't know if the dividend will get increased from now on, which it normally does get increased. I think that it might be a little bit difficult to increase it, but at the same time, I'm pretty sure the dividend won't get cut. So when we talk about a stock that is potentially having a 7.6 dividend yield that is safe, and also that I think that the stock price itself is slightly undervalued, and that I see a good 20 to 30% upside on the stock price itself, it seems like this stock is quite a decent value right now, and it is a stock that I don't currently own, but it is a stock that I am currently looking at buying, and I'm kind of weighing up whether or not to invest in it itself. But it's definitely a company that I really like, and it is a stock that I do rate as a buy. So guys, those are 5 stocks today that I'm talking about that are on a discount of 40% or more, that are good buying opportunities, I feel, for a few of you that might want to get into them. There's a few there that I have got into myself. If you enjoyed me talking about these 5 stocks, please give the video a like. It helps it out so much. If you could subscribe, that'd be amazing, and I'll see you on the next video.